Let me ask you a question. If I invest $10,000, we'll just say in the S&P 500, all right, it doesn't matter when. I just put 10,000 bucks in. It could be a year ago, it could be 10 years ago. It does not matter. And now it's worth $11,000. Have I made money? I have not put anything else into it. I have not taken any distributions. I started with 10,000. Now it's worth 11. Have I made money? All right. So anything could not be clearer. You start with 10,000. It's now worth 11,000 bucks. I've made inherently $1,000, right? I made 10% on my investment. That's what you would think, and that's what in reality the world is. However, some investment companies' statements will not show that. Let me give an example. I had a guy back when I first started USA back in 2008, I guess it was 2008, where he was adamant that he did not make any money in his S&P 500 investment account. And I was like, this doesn't make sense, because he had been in it for a long time, and even after 2008, after the market crash, he was still up, or the S&P itself was up. And I was like, I don't get why he keeps saying this. And we didn't really dive too deep in it, but what he ended up doing is he sold the S&P 500 because he said it was a dog, and he actually bought a life insurance policy. I was like, oh, goodness, a cash value life insurance. This guy, Charlie, from South Carolina, good guy, real good guy. He's since passed, but man, I was like, that's a mistake, especially after the last 10-year run we've had. But anyway, what happened was, and for the longest time, I was sitting there, I was like, why did this happen? Why did he think he didn't make money? It was weird. And then I finally was able to figure it out. He had put the equivalent of $10,000 in the S&P 500. It doesn't matter when. It was worth 11,000 bucks. All right. However, he also got the equivalent of $2,000 of dividends. So he put in 10,000 bucks. He got $2,000 of dividends. So the statement, his USA statement, said his cost basis was not $10,000. It was $12,000. Why? Because the dividends you receive are taxable, and they do increase your cost basis. That is a fact. That is a fact. So if you start with 10,000 bucks, you get $2,000 of dividends, your cost basis is $12,000. However, in an IRA, that's irrelevant. That's irrelevant because you did not pay tax on those dividends. You didn't. You only pay tax on the dividends in a non-IRA account, a taxable account. And that makes sense because you said, I have to sell my stock. I need to sell it, and I need to get a cost basis that's legitimate. My cost basis, again, is $10,000 plus my dividends at $2,000. That's a $12,000 cost basis. So if my account is only worth $11,000 in a non-IRA, that means I have a $1,000 loss that I can write off again on my taxes because I have a $12,000 cost basis. I pay tax on $12,000 total, my initial deposit of $10,000 plus my $2,000 of dividends, and I have $11,000 as my net proceeds, which means I'm down $1,000 from my cost basis, but I'm still up $1,000 from what I started at $10,000. But it's even worse in an IRA. In an IRA, in the USA accounts and other firms too, they'll say you have a loss of $1,000 because they're calculating the cost basis as if it's part of an IRA, as if you pay tax on it, even though it's in an IRA. So they're saying you got a $10,000 initial deposit, you got $2,000 of dividends. Now it's worth $11,000. You are down $1,000, but you're not. You started with $10,000. It's worth $11,000. You didn't pay any other tax on it yet. So we know for a fact that is simply wrong. You are up $1,000. And even on a taxable account, it's not quite the same because the cost basis simply means how much you have to pay in tax or what you receive in return of principal, essentially. So it doesn't mean if your portfolio is up or down. It just says you pay tax on this, that, and the other. You subtract that amount from your net proceeds, and that's going to be your taxable gain or your loss that you can deduct. It's crazy. So let me show you my own thing here. So remember, I bought 100 shares of ExxonMobil. I can't remember exactly when, but I bought it at $43.80. As you can see here, 100 shares at $43.80. No, excuse me. I bought it 100 shares at $40.33. $40.33. That's my cost basis. So this is my Schwab account. 100 shares. ExxonMobil, I bought it at $40.33, and as such, my cost basis is $4,033. Current market value is 43.80, which means my market value is 43.80. Subtract my cost basis. I've made $346 in this account. I hope that makes sense. All right, so far so good. Again, I bought 100 shares at $40.33. Right now, the price is at $43.80, which is significantly higher than what it was just a few weeks ago when it was down like $33. So it's come back very, very nicely. But I'm up. This is just one of my accounts. You can see it's 3.43% of my total account in this IRA. But you can see I got $4,380 my value. My cost base is $4,033, which means I'm up 3.46%. All right. So if we go to, and this right here is just my BitChute account. I tell you, BitChute gives me a hard time loading videos. All right, but here's what happened. I bought it at $40.33 on 8/26/20. You can see right there. That is my initial purchase. I also have a dividend of $87. All right, so right here at USA, what would happen is they take your initial purchase, they add your dividend at $87, and that whatever that was, it'd be the opposite of $39.46. They say your cost basis is $4,033 plus $87. And if they look back at your other thing, they say you've made actually less than $346 because we're going to take in your dividend into consideration as well. They say your cost basis is $4,033. Well, let me just get the calculator. 4,033 plus $87. They would say my cost basis is $41.20, and I'd only have a $43.80, so I'd have, what's that, $260 in gain as opposed to $346 because they say my cost basis, my dividend increased my cost basis, thus reduced my gain, and that's just wrong. So anyway, you can see right here, I don't know why Schwab does this. They say your transaction total is $39,846. That doesn't make sense. I guess they're saying, actually, I don't know what that would be. Because all I care about in this IRA is what I paid for it plus what it's worth right now, if that makes sense. That's all I care about. Actually, did I not reinvest those? I must have reinvested. Did I not reinvest? No way I didn't reinvest in dividends. Yes, I did not. Stupid. So anyway, I just learned something I don't know why I didn't reinvest. I say I should have more shares, but I don't. I got to reinvest that. That's dumb. Anyway, so I hope that makes sense. You got to understand how your cost basis works. And if it's an IRA, remember, what did you start with? And this is why Schwab account's nice, because it just says, look, I bought this 100 shares at $40.33. I know for a fact. Whatever I have that's different than 40.33 is what my gain or loss is. And right now my gain is $43.80, so I've made $346. I hope that makes sense. I'd love to hear your comments. We'll see ya.